Hey, good morning, everybody. Today is Tuesday, February 23rd, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use High Growth Stock Investors Spectrum Analyzer to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 8 came from airlines, 8 came from managed care, 8 came from the semiconductor devices industry, 4 came from consumer finance, and rounding out the top 5, we have quite a list. We have lodging, midstream oil and gas, apparel, footwear and accessories, internet-based services, real estate investment trust, and e-commerce discretionary, all with 3 stocks each in the top 100 most powerful stocks in the most powerful industry groups. Recently, we've been seeing a little bit of lodging, we've been seeing a lot of semiconductor devices, and we've been seeing a lot of airlines. These may be good places to look for leadership in the market as we go forward here. Let's start today by taking a look at the Russell 2000. As you know, I've been saying the Russell 2000 is the key to the market going forward here. The Russell 2000 really needs to take out this area of resistance down here in the 1040 area. We made a good start on taking that area out yesterday when we took out this trend line resistance. This trend line is the lower channel line in this channel that the Nasdaq set up, that the Russell 2000 set up when it first broke down back in December of last year. Right now we'll see if the Russell can continue to hold this trend line, if this becomes a new area of support, and then we'll see if we can make an assault on the 1040 area. Before I get overly bullish on the market, I really want to see the Russell 2000 take out that 1040 area. Let's see what the Nasdaq Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking is the most important element. So let's take a brief look at the market. Yesterday, stocks gapped higher and never looked back, closing at their highs for the day. Trading volume was weak, however, showing a lack of institutional commitment to the move. That noted, our market timing model is on a margin signal. A margin signal is our most aggressively bullish signal and indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. A word of caution here, our market timing model is a mechanical signal. When certain conditions are met, it mechanically changes, in this case to a margin signal. There are very few stocks in our universal watch list that are setting up in what I would consider proper bases, much less providing buying opportunities. So be careful. Advancing issues outpaced decliners by 7-2 margin yesterday, and for the first time since December of last year, new highs bettered new lows. That's bullish. Our overbought oversold indicator is now indicating a moderately overbought condition in the market. Large capitalization stocks outperformed small again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. This remains a volatile and somewhat unpredictable market, so be careful out there. Okay, yesterday, the Nasdaq was up 66.18 points, almost 1.5%. We closed at 47 45.70. And notice how we gapped above this level of resistance, which now becomes support in the 45.06 area. That was a powerful move yesterday. We gapped above the resistance and we closed at the very high of the day. That's encouraging to the bulls. What's not so encouraging to the bulls is we had that nice gap yesterday. We closed above the resistance area, but we did it on very, very light volume. The bulls would have preferred to see heavier trading volume yesterday. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February 18th. The Nasdaq right now is bracketed by support down here in the 45.06 area. We have resistance at this long-term trend line. This long-term trend line goes all the way back to 2009, the beginning of the bull market, and should offer significant resistance. Once we break through that area of resistance, the next significant area of resistance is probably going to be up here in the 4900 area. Let's take a look at the S&P 500. The S&P yesterday was up 27.72 points, or 1.45%, just a little bit less than the Nasdaq. We closed at 1945, and significantly, we took out this trendline resistance, which leaves the next area of resistance at the 50-day moving average. I don't think that that's going to provide a tremendous amount of resistance, but we'll see. Right now we want to see if we can continue to hold this trend line, which is the 2009 to today trend line. Trading volume yesterday was below average and was below the prior day. We are in a confirmed uptrend on the S&P 500. Right now the S&P is bracketed, I would suppose, by support here at the trend line and resistance up here at the 1993 area. Our market timing model is showing a margin signal on the market. A margin signal is our most aggressive bullish signal and indicates that aggressive traders can leverage their portfolio utilizing margin. More conservative traders should continue working toward fully invested. Right now our market timing model is on a margin signal, which, as I've said earlier, is our most aggressive timing signal. The problem with the margin signal at this point is there really isn't a whole lot out there that looks like it's setting up in proper bases, and so it's hard to find anything that we might be interested in buying. I do want to talk about three stocks today. The first is National Storage, which is a real estate investment trust that owns, operates, and acquires self-storage properties within the top 100 U.S. metropolitan statistical areas. We've talked about this one before recently. National Storage is setting up in a second stage base with a pivot point in the $17.94 area. It gets a 72% checklist rating and is flirting with this trend line. Aggressive traders that are looking for some place to put some money may want to take a look at National Storage if it breaks above that trend line on at least 140% of average daily volume. Next, I want to take a look at MaxLinear. MaxLinear provides radio frequency analog and mixed signal integrated circuits used in communication and video display over broadcast networks. Right now MaxLinear is working on this third stage base. The third stage base is generally a pretty late stage base, but because we have an 80% checklist rating, I would be much more interested in this third stage base than I might normally be. We have a pivot point in the $17.75 area, but notice how MaxLinear yesterday gapped above this trend line and closed near its high for the day. We traded over 140% of average daily volume yesterday, which provides a good buying opportunity for aggressive investors. MaxLinear may be a good place to park some money for people who are looking to invest money in this margin timing signal. The last stock I want to take a look at is MSCI Incorporated. It was recommended to me this morning by a friend for whom I have a tremendous amount of respect. This isn't a stock that I normally would have chosen, but MSCI provides investment decision support tools to institutions investing in equity, fixed income, and other instruments. Right now, we are working on a second stage base with a pivot point up here in the 73.44 area. MSCI gets a 68% checklist rating, and the reason that I'm a little bit hesitant about this stock is if you look down in this area, we've got a lot of wide and loose behavior. This area right in through here appears to be fairly tight trading activity. This area right through here appears to be fairly bullish trading activity. But this sloppiness in through this area of the base makes me just a little bit nervous. That noted, MSCI might be a good place for aggressive investors to park some money in an environment with a margin timing signal. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs Incorporated believes to be accurate. Ohannes & Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.